What's up everyone, it's Scotty with Money Investing. In this video, we are going to be talking about TSMC, so Taiwan Semiconductor. They reported their second quarter earnings for fiscal year 2023. So in this video, I'm going to break down everything you need to know about their earnings because the profits did decline over 10% for the first time since 2019 on a year-over-year basis. And the stock's also selling off pre-market. So we'll do a full fundamental analysis, calculating the intrinsic value, and also go over the technical analysis to break down where the next key support and resistance levels are going to be. So hope you guys enjoyed this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. We do have that 16% annual discount for our Patreon and Discord, which gives you access to all the buy and sell alerts, options alerts, trade ideas, all the other benefits, including private videos. And I'm also going to be posting more portfolio updates and private videos related to the stocks that I'm actually buying. So in fact, this is one of the companies that I am planning to buy and start a new position in today. I did a video for members only. You can access all this content as part of our membership. So 16% annual discount available with the link down below. So TSMC reported revenue slipped 10% from a year ago to Taiwanese dollars of 480 billion, with net income dropping 23% year over year to 181.8 billion Taiwanese dollars. And the company now has, or previously had forecasted second quarter revenue between 15.2 to 16 billion dollars. And TSMC said the business impacted by macroeconomic headwinds, which dampened the end market demand and led to consumers' ongoing inventory adjustments. And this is the company's first quarterly net income decline since the second quarter of 2019. Now, TSMC forecasted third quarter revenue between $16.7 and $17.5 billion. And moving into the third quarter of 2023, we expect our business to be supported by strong ramp of our 3nm technologies, partially offset by customers' continued inventory adjustments. And of course, it does make chips for Apple's iPhones, and Apple's next processor for its new iPhone is rumored to be based on the 3nm process technology. Comes out during September, so that's really where a lot of the demand for these chips is going to come from. Apple obviously being the biggest consumer. In May, TSMC's largest customer, Apple, reported overall sales dropping for the second quarter in a row. And of course, that's primarily the reason why TSMC's revenue might have also slipped a little bit over 10%. And the global smartphone market also plummeted 11% in the second quarter compared with a year ago quarter as well. So there's a lot of headwinds, especially related to when it comes to PC demand, smartphone demands, other technology, other consumer technology, which obviously is resulting in TSMC's production volumes to drop a little bit and revenue slipping a little bit over 10%, and profits also declining quite expensively because CapEx is still pretty high. Operating expenses were still up on a year-over-year basis. And Zhuan Zhu, the analyst at Canalys, says, and I quote, "The smartphone market is sending early signals of recovery after 6 consecutive quarters of decline since 2022, and smartphone inventory has begun to clear up as smartphone vendors prioritize cutting inventory of old models to make room for new launches as well." So this right here were some of the numbers from the company's income statement. So revenue in US dollars came in at $15.68 billion. So in line with the guidance that they provided, but gross margins also coming in a little bit higher than the guidance that they provided. So over 54%. So that's actually very good. Both revenue and gross margins coming in, one of them in line with the guidance, other one beating expectations. And then of course, operating margins also beating expectations at 42%. And then we got net income at 181.8 billion Taiwanese dollars, which obviously is a lot lower, not only quarter over quarter, but even year over year, down from 237.03 billion Taiwanese dollars. And net profit margins also did decline a little bit under 38%. So that really just goes to show that the company did have a lot of expenses in between operating profits and, of course, net profit margin, because we did see operating margins expand. We did see operating income also very nice, but of course, net income was not the one that kind of kept up with on a quarter over quarter, year over year basis, and EPS came in at just over 7 Taiwanese dollars. Return on equity at 23%, which was dramatically down from 39% same time last year, and quarter over quarter of 27.5% as well. So this right here is going to be some of the different chips that they provide. So again, the majority of it coming from 7 nanometers and 5 nanometers, so 30 and 23%. So over 50% of the actual production for TSMC comes from 7 nanometers or below. And you'll notice that it's kind of flatlined a little bit in the first and second quarter of 2023. Earlier, we've seen consistent growth even on a quarter-over-quarter basis, and that's primarily because of the slowdown in PC market, in smartphone market, but other sectors, other parts of the actual mix are also picking up for the company. This right here is going to be their balance sheet. So cash and marketable securities is sitting at about 1.4 billion Taiwanese dollars, up 29%. that's a percentage of total assets. So 29% of their assets are in cash and marketable securities, and inventories sitting at 234 billion. Long-term investments also at 94 billion, and then we got net property, plant, equipment just under 3 billion Taiwanese dollars, and we got long-term interest-bearing debts of 907 billion Taiwanese dollars. So that's actually a really good balance sheet, more cash than debt on the balance sheet for the company as well, and current ratio is well over 2.4, which just goes to show that they've got a very good liquidity position from a balance sheet perspective. Cash flows, free cash flows were negative, unfortunately, because of a higher capex. So you can see that cash from operating activities was down on a quarter-over-quarter and substantially down on a year-over-year basis. 167.2 billion Taiwanese dollars, and capex was 250 billion, which was definitely a lot higher from a year-over-year basis. So you've got operating cash flow down, capex higher, which obviously, again, results in free cash flow, which was negative 83.28 billion Taiwanese dollars, because free cash flow is nothing but operating cash flows minus capex. And then the company did not have any short-term loans, bonds payable 40 billion, and ending balance 1.2 billion for the company as well in terms of cash flows. So revenue expected between 16.7 and 17.5 billion US dollars in the third quarter of 23. And based on the exchange rate assumption of $1 to 30.8 Taiwanese dollars, gross profit margins to be between 51.5% to 53.5%, and operating margins to be between 38 and 40%. So again, very, very strong company, consistent growth here. Obviously, it's going through some headwinds because of the macroeconomic uncertainties, but you can see the consistent revenue growth, gross profit growth. We've got operating income also very nicely pushing higher. And we got diluted share count pretty stagnant, pretty flat. And of course, net income also has been growing, with diluted earnings per share also very, very nicely gone from 24 cents per share to over $1.29. And the expected number for them is going to be a little over 5 per share, 5.02, and that number is going to grow to over 8.21 by 2025 for the company as well. So this is going to be for 2023 all the way through 2025 for TSMC, and the share dilution has been 0%. So they haven't really been buying back shares, but they're also not diluting shareholders either. So if we plug in a very simple, I'm going to go with a conservative number here. Let's just do 16% to get started. I'm going to do a 12% discount rate, 10% margin of safety, absolutely no share dilution, and a PE multiple. First of all, we got to fix this a little bit here. Let's go with 20, or we might have to go a little bit higher here. Let's just do another 0, I believe. It's going to put 771, so we can do like 150. 578, so we can do like 130 here, 501. There we go, perfect. So now if we go do 16% growth rate and a P multiple of close to, let's say, 20, we get down to a fair value of actually $107 per share. And right now it is going to be trading at, TSMC is trading at just about 100. So there we go. It's actually not that far off, 7.5% undervalued, I would consider to be. But of course, if you go with a little bit of a conservative multiple here, 18 times multiple, then we come down to $97 per share for TSMC. And of course, let's take a quick look at the valuation here. We've got a little over 5 times sales. We don't have anything else, but earlier, before the profitability took a hit, we're trading at 14.3 times earnings, a little over 6 times sales, and just under 9 times cash flow. So we can actually even go a little bit lower in the P multiple, closer to 16, and we get down to $86 per share in fair value, which means another 13 to 14% potential pullback needed in order for TSMC to be trading at its fair value. And you can take a look at the growth rates, different P multiples, and see what works best for your analysis. But 86, even sub 80, is actually going to be a very, very attractive level to watch for TSMC as well. The only risk here, by the way, before we get there, technical analysis wise, resistance is going to stay but at close to about $104, $105. So this right here is going to be that level to watch as a resistance, and support level is going to stay put at $98, $99, all the way down to this right here. So this green rectangle over here is going to be a very, very attractive level to be looking into TSMC as a potential opportunity to dollar cost average or start a new position or start buying. We've got those moving averages sitting right there, the 200, 300 SMA, and of course a very, very strong area of support over here for TSMC in the $82, $85 per share range. So one of the risks obviously to consider is the geopolitical risk, the external risk with China. And I think that's one of the reasons why Warren Buffett also is, no longer in TSMC. In fact, he's kind of cut majority of his position. He was buying for a longer time. So that's something that we can't quite quantify. It's more of a qualitative analysis piece Whether China is going to invade Taiwan, whether there's going to be some geopolitical tension there, is yet to be seen, but that is definitely a risk to consider as well. And that's, one of the reasons why Intel and even TSMC are kind of moving into the US when it comes to manufacturing and production. But then how are the margins going to look like? Are they still going to be able to do 40% margins on an operating basis? Are they still can do 80%, 60%, or 50% gross margins? That's still yet to be seen. So I hope you guys enjoyed this video and found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Don't forget, we do have a lot of private content, a lot of private videos. One stock that I'm actually planning to buy, start a new position in this company today or this week. So that is going to be down below with that 16% annual discount also available. So don't forget to definitely join and sign up for it while it lasts. As always, happy investing. I'll see you all in the next video.